Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market recap. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay, guys, so we're gonna take a look at the markets. It's been a while since we've done a recap, but again, I want to let the markets kind of actually build on itself. I don't want to just keep doing recap after recap saying the same exact thing. So when there's developments, that's when I'll do an update, and we have some developments to talk about today. So starting off with the dollar, as always, so far in my opinion, the dollar has played out almost this doodle perfectly. Now, we didn't get the full pullback I was looking for, into this circled area. We did get a slight wick towards it, just right in that zone. Okay, and then from there we had a nice pull up, and we're getting towards the target zone. My ultimate area was around 108 to 109. We got very close, where we got as high as about 107.3, and in my opinion, we still have evidence here of more upside for the dollar. So look for potentially another leg to come and kind of tap around the 108, 109 area to really challenge this rising trend line zone over here. So I really want to see a lot of maturation of price action inside this monthly bearish fair value gap. And if we get signs of a topping move from this trend up, respect it. It's very likely it will lead to more downside. Now, I'm going to get into some fundamentals of why I do think that we will ultimately see the dollar trade all the way back down to probably around sub 103, going back down towards 102.5, and maybe even all the way back down to 100. Okay, I'm going to get into my reasoning in just a little bit once we talk about the Dow and such. But I do want to mention one more thing. So let's go on to the monthly chart here with the Dixie, so we can take a look at this real quick. So I'm going to kind of kill all of the drawings here so we can not look at any of that. All right, so notice how we've had this beautiful basing here on the monthly chart for the dollar, okay? And what are we doing? We're trading into that monthly bearish fair value gap that I had labeled. What we want to watch now over the next couple weeks, so rest of October and also November, is any signs of a slowdown in the month. And the first way you can get your first piece of evidence of that potentially happening is you want to see the previous month's candle high and see if the current monthly candle closes below or above that high. So let's just say theoretically, in this month of October, we have price close under last month's high, September's high, which was 106.839. So we're actually under that right now. If that happens, it doesn't guarantee, but it does increase the probability of a slowdown in the particular trend that may be occurring. And in this case, we've had 3 up month candles, including October here. So if we do end up closing below September's high on the Dixie, that could be an indication on the monthly chart of a bearish November to come. Okay, now bearish November does not mean it's going to dump all the way down sub 100. Just means you'll have a negative month for the dollar, and that could mean as much as just slightly below the current open of this monthly candle. It could just mean that we close a bearish doji, or it could mean that we do have a bit of a pullback back down to 104 or 105, or it could mean we do have a decisive move down, similar to what may have happened here back in November of 2022. All right, so our first step is to see on this monthly chart over the next 15 days, will we have the dollar close under September's high, or will we have the dollar close above September's high? And if it does close above, it has implications of continuation to the upside. So we'll keep our eye on that as the chart matures going into the end of this month. All right, so let's take a quick look at the U.S. indices. We'll start off with the Dow. I'm going to get into kind of talking about the Fed just a little bit here. So overall, the Dow's been pretty interesting to watch. We did have a nice little pull up from here, kind of like our doodle showed here. We're actually going to get rid of some of these drawings. So we're going to get rid of these circle pivots here, because this was the sell side I wanted to see get taken out after we made either a slight lower high or a slight higher high from this pivot up here. We actually didn't really get to the area I was looking for. Minimal was about like 35,300. We actually couldn't reach that. We got to about 35,100 and then broke down. So we'll get rid of this doodle here, and we'll also get rid of this doodle right here, All right, and this one here. So generally we're playing out the downside move now. So we've had our little bounce here, kind of like we've seen from this doodle. I want to see us pull further up here back towards 34,150 and then look for continuation lower to essentially, if we're going to have a bullish continuation over the next month or so, so over November, we'll see some sort of bottoming structure, some sort of structure that's respecting the sell side of this area here and this consolidation here. Okay. Now, if we were to lose these pivots down here, that will imply more long-term bearishness for the Dow. So this is going to be a respected level right here. This is going to be very protected, these lows right here. But this low here, just like this low here, can easily be taken out. It's not going to hold the same weight as these lows down here. So we'll ultimately probably see price make its way up slightly, coming back towards 34,100, and then look for potentially more downside. If we do get that slight uptick early in the week, or early next week after next, I should say, that's probably because the dollar has either reached 108, 109 over next week, or it's in a longer, larger consolidation. Okay, so we'll watch this closely as well. And before I go into the S&P and the Nasdaq, I do want to touch on the Fed. So a lot of data has come out last week, and the data was pretty mixed. Obviously, inflation was increasing. The jobs market actually, the jobless claims wasn't too negative. It was actually fairly strong. It showed some resiliency from the jobs market. So, what that will do to the Fed is it will definitely bring into question, well, are they going to raise rates again? Because the jobs market's not really, breaking as much. Inflation is still rising relatively. So there is definitely an environment for them to continue to raise. Now, I'm going to give my opinion, and it's just my opinion. I don't believe they're going to raise again. I think they're going to continue to pause for the rest of the year. And I don't even think they're going to raise next year. I think that is done. I do think we're going to be in a pause for quite some time. And then sometime next year, I'm aiming around mid to maybe third quarter of next year, we will get our first round of easing in the markets. There's a couple of reasons why I think this is going to happen. One, I think that the Bank of Japan is kind of leading the way like they always have. If you don't know about this, you should actually look into this. The Bank of Japan tends to be forefront in central bank policy, and that they're always the first central bank, or usually the first central bank, to adopt a pivot, adopt a new trend in policy for the central banks. And what have we seen from the Bank of Japan? Well, they eased already, and they've been pausing. So there's no sight of them raising either. So it's they're either going to pause or ease. And I do think that all these central banks in the West, Europe, America, they're going to do the same thing. They've been pausing, and eventually, sometime next year, I think we're going to go back into an easing market. And unfortunately, I don't want to touch on it too much. It's a very emotional and volatile situation, what's going on in the Middle East. Prayers to everyone involved. It's a tragedy on both sides. That is not going to really help in economic prosperity. And there's a lot of reasons now to essentially unwind and kind of uncork the market. So be prepared as commodities go up higher, gold, silver, oil. Again, we'll touch on that in a bit. That the Fed and all these other central banks are going to have to kind of ease up on tightening. And again, we'll see if my opinion is right, but I have to tell you, I'm fairly confident on it. If you're looking for another round of raising, it's not out of the question. Not saying you're out of your mind, not at all. The data would suggest that it could definitely justify another quarter basis point, but from the pattern I've observed over these couple of decades here, going back and looking at history, when the Bank of Japan pivots, it's usually 2 or 3 quarters into the future, and they eased a couple quarters back, and then ever since we've seen central banks in the West, including the Fed, pausing. So I think we're in the same pattern where eventually we're going to see these central banks just ease at some point next year, and I don't foresee them raising at all. Just pausing to easing. All right, so if that does happen, then obviously risk on is going to come back into the market because, well, you're going to have to try and beat inflation somehow, and a rising market's going to be a very lucrative and a very attractive place to park your money if you're trying to beat inflation. because it's just going to get worse in that scenario. A hyperinflationary event seems to be happening. And then also what's going to be interesting is, in my opinion, we're going to get something that's kind of unprecedented, is the dollar is probably not going to weaken as much as people think, because you're going to see the foreign currencies all around the world kind of die against it. And that includes the euro, the peso, everything will start to die against it. And the rest of the world is going to be running for the dollar, safety net. And a lot of the big money is going to be running for risk on assets like equities, and maybe crypto. We'll see how they do. So just keep your eye on that. I think that's going to develop over the next year or two, and then really come to fruition around 2026 at some point. Okay, so let's take a look at the S&P, see how that's doing. How did that follow the doodle? And this followed exactly. Look at this, and beautiful. So we had a breakdown, came into this bullish fair value gap here. It's a monthly fair value gap here. Popped back up and checked out the 1 week bearish order block. Just wicked right on that, failed off, and then continuation back into this bullish fair value gap here. And now we've had a nice little pop up, nice little run over the last week or so, and now we had a nice pullback, and we're trading into this bullish fair value gap. I would look for a little bit more downside going back towards like 4,300 yet again, and then we'll see probably a pause here for a little bit, something akin to like this, where we'll see a move a bit like this. And then we're going to have to wait and see how the dollar wants to play out. So on this move down, will this be enough for the dollar to have been reaching about 108, 109? Because once dollar reaches around that zone, 108, 109, I would be on the lookout for a failure on the dollar to pull back down. And that will likely lead to a move kind of like this, an upside move. And we'll likely see the S&P trading back at 4,500 to 4,400, around this general zone up here. And if it gets really, really bullish, let's just say it does something like this. Ooh, not that. Let's say it does something like this, where we get to about 44.30, 44.50, and we pull back, and we had a really, really strong displacement here, and we hold this level, something like this. We hold something like this. This is going to really imply major upside to take out this pivot here, take the buy side all up here, this 1 week buy side liquidity up here, and then look for a major failure. In this scenario, I think the dollar's going to have to really get smacked down from 108, 109 and make its move all the way back down to like 103, 104. And it's definitely possible. Okay, it's definitely possible. Again, we'll have to wait and watch, but this is definitely a potential scenario that's bullish. If we're looking at a bear scenario, then we're going to look for something like this still, and then a failure around this zone prior to the breakout here that leads to something like this. Okay, so instead of getting that continuation upside, we'll get something akin to this instead, where we break up like this and then actually fail back lower like that and have continuation. And the next major level is going to be this 1 day sell side liquidity here, so the sell side under these levels here. And once we get to that, we'll definitely be due for some sort of reaction, a bullish positive reaction that will likely lead to a lower high of some sort from this high up here, and definitely these highs up here. Okay, so we definitely have both scenarios on deck. I can't tell you which one is like super probable. I am leaning more towards a bullish setup because the sentiment seems to be very bearish, and I do think people are underestimating what's going on with the central banks. I don't think they're really taking into account how much the Bank of Japan is into the future. And I do think policy now is going to be really focused on the central banks working in tandem, in unison. And I don't think the data is going to force them off of the idea of keeping the rates paused. And if they do that long enough, it's really going to start putting pressure onto the market to be risk on. In my opinion. Again, we'll see. If anything gets out of hand with the war, of course, either war. It's so sad I have to say that, whether it's the Ukrainian-Russian war or what's going on between Gaza and Israel. Then that could definitely change the picture. And if that should happen, obviously we'll do an update, and we'll see how that all plays out. All right, let's take a quick look at the NASDAQ next. So NASDAQ has been pretty interesting, right? It's been holding out pretty well. We made this lower high here. I am looking for a little bit more downside off of this But this is definitely in a much more tight structure than I would have expected. If you look at my doodle here, I was looking for this to get up to here, which it did, and then kind of fail off of it, more akin to what the S&P did. But it actually held really well, and I think because I really underestimated how well tech is doing. Tech has been doing extremely well over these last couple months, and it's just been a huge value play in some of these tech plays, mainly like Tesla, Apple, and a lot of those companies. Even though they're not part of the Nasdaq, they're part of the S&P. They have a lot of sympathy plays inside the Nasdaq, so it's been very interesting to watch. But I eventually do think we're going to get back to the arc zone. So even though we didn't get to it off of this move, this leg down right here, I do think we're going to get back down to this area about 14,300, maybe even just 14,000 flat within this leg here. Okay, so I am looking for that. If we shouldn't, and we do actually hold this structure, that's actually going to imply some serious bullishness, to be honest, because you have a really nice move up, and then if you do something like this, and we actually hold this, kind of like, let's say we hold these lows, this is going to really imply bullishness. And if you've been following me for any time, I've always told you one of the biggest cheat sheets in charting, whether you're intermediate, whether you're advanced, or whether you're just a straight up novice, one of the biggest things is if you understand basic structure, that if prices come up quite a bit, something like akin to what we see here, like this, there we go, and kind of grinds lower like this, okay, and holds a grinding structure, what this implies, the probabilities are a bullish continuation of this move up. Okay, so if we do end up doing that here, it'd be very interesting, because then we have to talk about the all-time highs being targeted. So that's what makes me quite skeptical that this is actually what's building. Now I don't say it's impossible, but it's just I'm skeptical. Okay, I don't really see it happening, but it may end up happening, and we all respect what's being built. But so far, it's been pretty impressive to see how it's holding. If we do get kind of what I'm theorizing early, where the Fed's like, hey, we're not going to raise rates for the rest of the year. I don't think they're ever going to announce that, prior to the end of the year. But if they were, then that would definitely lead to some definitely positive bullish pressure towards the Nasdaq, particularly because of its nature. A lot of risk on equities lie within the Nasdaq. Okay, so either way, I still think the orange zone is going to be a clear target. And then eventually, should we lose that level, we'll just come to this consolidation here, look for a move sub 13,000, ending around the 12,900, 12,500 zone, the green zone down here. All right, so let's take a quick look at oil. So oil's been oil's been really bullish. And I've been screaming about this for a long time. Every recap I mention it. So we end up taking the buy side above these equal highs right over here. So that's great to see. So we're seeing a lot of maturation in the oil chart. We'll actually get rid of this circle here, since we don't really need that. We already took the buy side, and now we're making that higher low, kind of like what I was drawing out here, making the higher low, and now we're likely going to see more continuation higher to eventually challenge these pivots here. And then once we get up to here, I would then look again for a little bit more downside from there. But ultimately, I find oil to be extremely bullish. I don't think this is going to really stop over the long term. You're going to see oil get back up towards the 110s, 120s, and potentially even higher, especially because of what's happening overseas. So, none of that helps the oil price. It actually makes it, stronger and stronger. So, definitely got to keep our eye on oil, but nothing's really changed with oil. It's just, it's super bullish. And unfortunately, it's really going to affect the cost of living, namely food and transportation. So, keep your eye on it. But yeah, we had a nice little pullback, but that, as you can see on Friday, that pullback has begun to be eaten up, right? This was an extremely powerful move, and I think next week is going to just be continuation. This was a bullish pullback, and it's likely just going to continue from here. All right, next is gold and silver. So let's see how they're playing out. So they also had a beautiful Beautiful rejection from this level. Beautiful pop from this zone here on gold. Look at this move. Okay, so gold came nearly towards the zone, circled up here, made like a double, like it actually wicked right into it, but it didn't actually trade heavy into it. But we got really, really close, trade into this fair value gap here, and then broke down. And where did it tap? Where I've been saying watch for gold to get back to is around the 1800s here, these two levels right here. Pop right in and boom, skyrocket out. Now, what it'll be interesting to see is if next week we end up taking the high up here and taking the buy side above these equal highs. If we do, be on the lookout for a higher low to be made. So if we see something akin to this, where we pop up, take the highs here, and then break down, if we get a higher low that forms here, pretty much anywhere, and we respect and protect this low here, this is going to imply major continuation to take the highs here, okay? To eventually take the highs out and continue price discovery for gold. So this is going to be a major zone. So if you're bearish on gold, you're going to have to really, really be very careful. You're going to want to see these highs and these highs defended. But as of right now, there's a lot of potential here if we can get a higher low here, to pretty much take it all out. So this is a very, very powerful move off of gold. I feel like the bullish retracement has potentially completed. I would have liked to have seen this low getting taken out, but it did tap into it, and it did take this little intermediate low here. So it did take some sell side liquidity, but in the end, we'll end up having to see how next week pans out. But this was a very powerful close going into Friday. And obviously, it coincides with the uncertainty and fear of what's going on overseas. So if that continues, then gold's just going to get more and more fuel going forward. Next is silver. See how silver's doing in silver, just like gold. Very powerful respect for this level. Very powerful rejection off of this level here. Bounce right here. So again, coming into this bullish fair value gap, as you can see right over here. So we see this bullish fair value gap get traded into and then pop right on out of it, and now coming back into pretty much into this wick and these this little imbalance here. And I would, again, just like with gold, if we get more craziness going into next week, then you definitely want to watch out for silver to have continuation. It's not as impulsive as gold was, but definitely can turn bullish if we do end up taking this high here, about 23.77, give or take, and then make a higher low somewhere around the 22.5 to 22 level, pretty much not taking out this low. If we do that, it will have a very, very similar structure to what I'm seeing from gold, which is probably the most bullish structure. If we do something like this, then look for major continuation to eventually take out the buy side here. This is going to be very attractive, and then the buy side up above this level right here. I mean, so silver has a lot more room to play before going into price discovery compared to gold, right? So definitely want to keep our eye on silver. And overall, it's been respecting the general area. It got to one of my major areas, which is about 20, just about 21 to 20. So it did pretty well. I do think if it's gonna flip bearish, it could definitely come back down here and take out the $20 zone. Now, if we take out this pivot here, be prepared for silver to probably flip bearish and make its way all the way down eventually to like the 17s. But right now, it's looking pretty solid to try and have a bullish continuation if we could take out this pivot here. So that's gonna be the first thing we want to see. All right, let's take a look at Bitcoin to close it out. See how that is developing. I'm gonna look at a naked chart just to get a good view of it. So Bitcoin's been pretty interesting, quite boring. If you've been watching the market, it's been quite boring. Now with Bitcoin here, so what's interesting about Bitcoin so far is there's been a lot of fighting here. Big defense here from the downside from this candle here. So big fight here. We actually didn't take out this low here. So you can see this low has been protected over the last couple of weeks here. So we have a lot of protection here. But notice that if this is trying to threaten a grind up, now what will be interesting is if price can do something like this, where it starts to kind of grind its way kind of like this, what you want to look out for is bullish continuation. Okay, so you want to see some sort of structure that has a bottoming structure here, that has some sort of foundation. If we get something like that over the next couple of weeks, then I'll have more confidence that we can end up seeing these levels up here, about 30,000 plus, getting targeted. As of right now, I'm more bearish neutral on it. There's really not much to say. It's pretty much caught in this pretty peculiar range here. Okay, it's a pretty peculiar range. It's trying to have continuation, kind of like this, but if it continues a staircase kind of like this, I'm not going to be super bullish on that. That's going to have a more bearish bias to it. Now, that doesn't mean it's just going to dump all the way down to, like, let's say, 19,000, but it could. What we want to see for bullish continuation is some form of structure that's kind of grinding lower, or it has some sort of, clear, kind of a bottoming W structure or N structure or something like that, right? So we're not really getting that just now. We're getting something like this actually. So let me kind of show you what I'm looking at. So what we're getting from here, look at this. So we're getting this rising price action, okay? This grindy price action right here, okay? So this is very similar to this. That's why I want to see now, can we, as we potentially break lower, can we do something that's kind of rounding like this, and we can get kind of like a Adam and Eve double bottom kind of structure, that will imply, at least in the short term, some bullishness to at least try and fight and take this buy side liquidity from this high here and this high here, and really come into this imbalance up here, and then we'll see as Bitcoin gets back up toward those levels, fail from there. If we're gonna have a bearish breakdown on the U.S. indexes, but again, we're in a pretty neutral area with price action that does make me lean fairly bearish in the short term, but it may end up building something bullish going into November. So we'll have to kind of give this more time. I'm not really expecting much else from Bitcoin. I do not see any signs of impulsiveness right now. I don't see any major signs of major bearishness. So I'm not looking for any major trending move out in either direction right now. This seems like it's building something, but right now what it's building right here is not particularly bullish in the short term, but it may turn into a bullish structure as time goes on. If we don't get that sort of bottoming structure and we just continue to grind higher, that's going to definitely be more on the bearish side. And I would say if we do that, I would look forward to kind of have a finale as we come into these pivots here, and then that would lead to a major breakdown, kind of like that. Okay, and that would be, I guess, if you're looking for the head and shoulders sort of structure, right? You're looking for that head and shoulders idea. I guess that's how it would look for you. And I would say it's a bit early for that, and I'm not a big fan of these sort of those sort of structures. I'm not, like, I don't like to look at it that way. But if you're looking at this as a topping structure, I guess that's how it could be building. Maybe it's already done the right shoulder. Who knows? But anyway, like it to me, I'm not really too bearish on Bitcoin at all. Like I would have to see Bitcoin kind of coming back down towards this low here, and I probably have to even see it kind of like really show signs it's gonna nullify these lows here. So I don't really see that just yet, and I'm not really seeing any signs that we're gonna get any decisive action yet either. So I don't have any expectations. So I'm just letting price action kind of do its thing. It's one of the reasons why I haven't done a recap in a while, because Bitcoin, there's really just not much else to say. It's been here for quite some time, and there's pros for the bull side, there's pros for the bear side. Like I can see both ideas pretty clearly here, and all we can do now is just kind of wait and see how it develops. And again, we'll just have to wait and see. So that's about it. We're gonna have to kind of watch the world, obviously watch the markets, and I do think that the dollar is definitely the most interesting chart. You definitely want to keep your eye on dollar, because this will eventually affect crypto as well. It will affect them. So if dollar does have that major move up, going towards 108, 109, and let's just say Bitcoin doesn't break under, 25,000, give or take. If that doesn't happen, then you got there's a very high chance that Bitcoin's going to go up. Okay, so if somehow the dollar gets up to 108, 109, and you're not seeing Bitcoin breaking under this level here, that's a super strong sign that crypto and Bitcoin specifically is likely going to be pretty strong going forward. Because I will tell you this right now: the moment that the markets are clear that it's risk on time, it's very likely that crypto is going to do pretty well. At least I would think so. Outside of any fundamental issues, with exchanges, or just law wise, it's going to do fairly well. And the longer these wars, unfortunately, the longer these wars may go, alternative money is going to become more attractive, especially if you're trying to travel with value and you can't take anything physical. So it's going to be very, very difficult in these coming days, weeks, months, God forbid, but maybe years. And Bitcoin and crypto in general may be a really, really strong alternative for some people. And maybe even some countries. We don't want to underestimate what's happening. If you look over in all these countries, Brazil, obviously Middle Eastern countries, even some European countries. I've been watching pound, obviously euro. Euro's had unprecedented. I'll actually pull that up here. Chart downside here against the dollar. There is definitely something brewing with these currencies, and if it gets bad enough, you're going to see people looking for alternatives. I mean, look at this. Look at these. This is unprecedented. I don't know if this has ever even happened, where you had consecutively, what was this, like 8 weeks, 3, 6, 7, 8, 9, 10, 11 weeks of straight down. That's unheard of. And then we actually have one positive week, and then we have closing negative again. So this is just incredibly weak from the euro, and also it was incredibly strong from the dollar. That's why I said the dollar's one of the most, if not the most interesting chart right now. I mean, this right here has been incredibly powerful, and look at this on the weekly. See, unheard of. Right, so we're definitely in the process of something major, and we want to respect that. All right, so guys, be as conservative as you can. Try to be wise. Don't rush into anything. And obviously, if you have any questions for me, you can always leave them down below in the comment section. I always answer them if I can. And then if you don't know, you can join the Discord. The Discord is free. I do have paid services, but the Discord itself is free, and you can always get in contact with me there. And I try my best to be as open as I can there. So it's definitely the best way to contact me as well. So if you're interested, you'll find the link to that down below. If you're interested in any of those paid services, you'll find the details on the Discord or in the Patreon link as well. All right, guys, that is it. Everyone, take care, and remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.